Hello everyone, hope you can hear me loud and clear. I didn't test my headset, so I'll just check with Anna. Can you hear me okay? Yeah. Can you hear me okay? Yeah, fine, great. Okay. Okay, just starting with the three indices. I've got the YM, the NQ, and the ES. I've got those on 5-minute time horizon at the top, and then down at the bottom, I've got them on the daily time frame, strung out in alignment. And as Anna said, it's pretty obvious from, you can really look at any of these. The volume point of control, we're trading around there. And I have to say, it's been pretty much this way throughout the session from this morning when we started on the first webinar over here, 8 o'clock UK time. So it's been a bit of a grind for index traders, whether you're trading on Globex or whether you're now trading on the cash markets open in parallel. So that's where we are. It's no great surprise given what's going on later. Markets are probably going to be waiting. Just flicking up the daily, what Anna was referring to in terms of the daily profile, this is what we saw at this is what we've seen over the last 3 days. This attempt to rally, so we've got an attempt to rise and we've got falling volume, which is not a terribly strong signal of a continuation of that particular upwards momentum, because as always, what we want to see in an upwards move is we want to see rising volume. And what we've got here, only over three candles. I appreciate that, but it's the volume is falling away, and it just signals a lack of participation, a lack of interest to the upside at the moment for whatever reason. And that's pretty much universal across all three. Same here, pretty much the same here, almost the same sort of volume there yesterday. But in terms of the NQ and the ES, they again on the daily time frame have been trading around the volume point of control. Very strong platform of support in below. Another one here, this was actually tested as well as it came down to hit the volume point of control and bounce off this support region here as well on the accumulation distribution indicator. But it doesn't look terribly strong. And what's interesting at the moment, if I pull the VIX across, and I'll just pop this up full screen for you, there we go. This is on the 1 minute, this is on the 5 minute, this is on the 10 minute, and this is on the daily. And what we're seeing right now is anomalous. You can see the VIX is falling, certainly since the start of the open, which is over here. We've seen the market, the VIX falling away, certainly on the faster time frames at any rate. And yet, we're not seeing that reaction in terms of an uplift in equity markets. And there's quite a lot of disconnect going on at the moment. And the reason is primarily to do with what is going on in terms of the VIX and volatility, because the market per se and the big, a lot of the institutional buyers and a lot of the big market makers are actually buying volatility right now because it is on the expectation of the presidential election being a volatile period. It's the perception is that there is not going to be, or there possibly won't be a clean result, and at the very least, a result which will be challenged by one side or the other, which creates uncertainty in the markets and hence volatility. And the expectation is that that volatility is not going to, it's not going to be a reaction as we saw, for example, in Brexit, where it was a very dramatic response initially to the news, or when you get a presidential election where President Trump was elected, you get a pretty quick response and then the market calms. The expectation this time around is that is not going to happen, and there is going to be a lot of uncertainty, speculation, which in turn will generate volatility in the market. So that is the expectation. So there's this curious divergence, if you will, on the longer term in terms of where the VIX is. The VIX has been trading around this level for some time. We've mentioned it many times before. It's 26. Well, given the extent of the rally that we've seen, certainly as far as the NQ, which has been, roaring higher. It's come off obviously in the last couple of weeks or so, but certainly prior to that, it was rising very strongly, and yet the VIX was not following suit. Given the extent of the rally on equities, you would have expected the VIX to be well down into the 10, 12, 13 area, back to par, if you like, where it would normally reside, given such an extensive rally, and it isn't, and that's part of the reason why. So it's curious at the moment. We have these this run up to the election, which is now increasingly going to dominate the news. It's going to dominate it intraday and certainly over the longer time frame as well. So you can see the price action, it's self-evident, and it's very similar in a way to last week. I've got time and sales running down here. I'm not going to do that at the moment, but we will be focusing more on time and sales and also order flow as well. Let's just go to, here we are, multiple time frames. I've got the YM here. Could be any one of three, so it really doesn't make much difference. And what I said last week still applies very much this week, that if you are going to try and trade those markets where, this was the 5-minute chart we were looking at earlier on. If you're going to try and trade these markets and you're comfortable trading faster time frames, then the only way you can approach this as a scalping trader is to really move down to these very fast time frames, 15-second. I have this a lot because it gives me a heads up as to what is coming up at me into the 1 minute or into the 3 minute and so on and so forth. So whether it's a 15-second or a 30-second, now a lot of traders will find that an uncomfortable time frame to trade. And if you're one of those people, then I suggest you don't try and force yourself to do things you're not comfortable with. If you're not comfortable trading at speed, don't do it. Step back, and on days like this, where the market is very range bound and trading in a tight range, clearly it's in the consolidation phase. It's waiting for something to happen. Then the best move for you is just step aside and say, well, actually, do you know what? I'm not going to trade, because I don't think much is going on, or go and look for other trading opportunities in other markets if that's what you're comfortable doing as well. Some traders only trade index futures. That's where we started. Anna and I started trading FTSE 100 index futures through Liffey, which sadly is no more, 20 odd years ago, and that's all we did all day long. Nothing else, weren't interested in anything else. So as soon as the FTSE 100 opened up, the futures market opened up, that's it. That's what we were trading. And it was £10 a point, I think, from memory. Might have been 5, I think it was 10. And that's what we traded. We didn't trade anything else. And that's absolutely fine. If you're a specialist, if you want to focus on one particular market or one particular instrument, a lot of traders, for example, will say, well, I'm only going to trade oil, or I'm only going to trade an index, or some traders say, well, I'm only going to trade soft commodities, because soft commodities is much more of an analytical process about understanding weather patterns and understanding crops and understanding exports and imports and who's growing what and all the rest of it. It's more, there's more analysis to do, I would say, in terms of understanding geography and the crops that are rotated and worldwide demand and how that is like to impact and export tariffs and all sorts of things. So it's a completely different market, but you can apply VPN exactly the same way. So some traders will focus on that particular market. In the currency world, some traders will limit themselves to perhaps 2 or 3 majors, or perhaps they'll have a couple of majors and a cross-currency pair. We trade everything. So to us, we just trade what's moving. And at the moment, the indices are not moving. We'll have a look at oil and gold in a moment. I think oil is pretty static as well. But this is what's going on in the 15-second chart. VPA applies exactly the same way, but the principle is exactly the same. You've got the volume point of control here. You've got support and resistance layered up and down in terms of price. We've got this big wedge of volume, which just sits around the volume point of control itself. So until the market breaks through from one of these regions, just move that out of the way. We're looking on a 15-second chart, we're looking for a move. We've got price-based support coming into play here. We've got resistance overhead, which is pretty strong here on the accumulation distribution indicator. And in terms of a breakaway from this congestion phase, then it's a question of defining your levels. Just pull this over a little bit, see if that helps at all. Gives you a slightly different perspective on where we are. And in terms of, looking at opportunity, we've got a pretty strong ceiling in here around this sort of region at, where are we, 475, and a floor maybe in here around about the 440 region. So in terms of a breakaway opportunity, you're either looking at something moving up into this area or something moving up into that area. And until it gets to those sorts of levels that you've ascribed to the trading position for yourself, you just have to sit and wait and be patient, because it's just going to continue to oscillate up and down, and it'll be doing the same thing on the slower time frame charts. So have a look at the 1 minute just for slightly different content, but exactly the same process. Let's just pull that one over as well. Not quite so well defined as the 15-second. Again, you can see all the various levels coming into play. This is a very strong platform of support, this blue line, which is actually being tested right now. But if you were looking at the opportunity, for example, if you said, well, I'm waiting for a break below that level to actually go short, the question you've then got to ask yourself is, well, what's likely to happen next? And what's likely to happen next in a short position is that you're going to get into congestion down here, which is only, what, 10, 12 points below. So you have to ask yourself, well, is that enough for me? If I'm going to put however many points at risk on the upside, which might be quite a lot, given that you've got quite a lot of congestion around here, so it might be up here somewhere. So you might be laying out 20, maybe more, maybe 25 points to actually try and grab 10. It's not a great return for that level of risk. This is not about risk and reward. This is not my saying, well, I've got to have a 2-to-1 or 3-to-1 or that sort of nonsense. What I'm doing is I'm actually looking at the chart and assessing the options and saying, if it breaks below this level, is that a reasonable return? The short answer is no, because you can almost guarantee that once it hits this level, it will congest. It has to, because it's at the heaviest volume on the chart and it's at the volume point of control. It's what you expect to see. Let's just have a quick whiz round and go and have a look at some other markets. Let's have a look at currency futures. The euro was rising quite nicely. Where are we? There we go. It was a nice trade on there because the dollar was falling strongly. Still climbing the euro. You can see it here on the currency strength indicator. And whether you're trading futures or whether you're trading spot, the CSI and all the currency indicators perfectly valid. Great indicators to have alongside. Doesn't matter what instrument you're trading. This is the move on the euro. Little bit of weakness coming in here. You can see it. Lots of volume gone into that last candle. Nice wick to the upper body. What are you expecting? Well, you're expecting at the very least a pause point, possibly a sort of pullback. We'll see what the next candle does, but certainly at the very least, you had nice rising volume here, driving into the market, and then we get this one on the third attempt, and we've got some weakness to develop. So we're expecting a pause point. That's the advantage of VPA. It tells you what is likely to happen next. In addition to that, you've also got the euro very strongly. I think this is on 5 minute. Yeah, this is on 5 minute. The euro is very strongly overbought up at the top here. So, it's giving you another heads up as potentially this is getting to a pause point in that particular trend on that particular time frame. See what else we've got going on here. This is on cable. It's a 6B. Massive spike in volatility. This probably is something to do with Brexit, I would imagine. Absolute ton and a half of volume coming in. Volatility candle triggered. And it's just going to have a quick look on a financial juice. We've got absolute massive volume coming in, which tells you that the market makers are in there in their droves. They've driven the market higher, it's spiked higher, traders jumping in, getting stopped out now because the market is about to either congest or reverse. That's the volatility signal on there. And we're now coming back down onto the volume point of control, and we will probably trade inside the spread of that candle for some time. It's also got a massive spike to the bottom. Who's speaking? Andrew Bailey speaking. So he's probably mentioned something about either pulling back, rowing back from negative interest rates, or the likelihood of negative rates. So he cannot rule them out apparently. So that's the reason you're seeing that. Nice opportunity for the market makers to make a bucket load of money and trap everyone into weak positions. Where are we? Sorry, I have the chat box closed. Let me just have a quick look at the question. What do you mean by buying volatility? Do you mean buying on the expectation? Yes, absolutely. Buying on the expectation of volatility. You can buy and sell on a chart volatility in the same way that you can buy and sell a currency pair or an index future or gold or silver or whatever it is, commodities. You'll be able to trade volatility, in other words, and you can either buy it or sell it depending on your stance on what is likely to happen next. So that's a 6B, so that's the reason. Politics, again, sorry, not politics, it's BOE statements and what have you. That's the 6C, which is the not the dollar CAD, it's the CAD dollar, because everything is inverted on futures. It's always quoted against the dollar, so this is the CAD dollar, not the dollar CAD, which is why the numbers up here look a little bit strange in terms of notation. Euro dollar is the same. This again is this is dollar yen, so this is yen dollar, and finally we've got the New Zealand dollar over here. So you're looking at, on futures at any rate, on this currency matrix, you are looking at a very clear picture of dollar strength or dollar weakness reflected across the pairs themselves. You don't have to invert them, in other words, as you would in spot. So you'll see them all going in the same direction. If there's dollar buying or dollar selling, they will all move in the same direction, in other words. Let's have a quick look at oil, see what's going on there. Okay, we've got a decent move going on here. Nice. Okay. Down to the volume point of control, lots of volume coming in here. Volatility into sideways, another volatility at the VPOC into sideways, starting to break down. Very nice example of the price waterfall developing, and then we start to see some buying coming in, the stopping volume. Here it is underneath the wick of that candle. The volume point of control has now dropped. It was up here. It's now moved down here. Why? Because the volume here is building. This is, remember, this is a 15-second chart. This is very quick, but what it does signal to you is that these indicators are not, the volume point of control is not a thing anchored in time forever in the same place. It's not the ship, the anchors of a ship where it's just dropped and left there. This will move. It'll move according to how fast these volume areas build and rebuild. And once they start to build and rebuild, then the volume there will develop further and it will extend outwards and be greater than a previous level, and at which point the volume point of control will move. So that's why that's actually been triggered. We're now in congestion. We've seen the initial buying coming in here. We're now waiting to see what happens. We're waiting to see if we get a reversal of this. The trend monitor, you can see, is still bright red. Hasn't transitioned yet, but it will do if this continues. This is obviously very quick. This is 15 second, but that's the power again of VPA. You see it instantly. It gives you a heads up what the insiders and big operators are up to, and it just gives you the answer to the question, what's going to happen next? Well, it tells you what's going to happen next through the prism of volume and price. Let's see what it looks like on the 1 minute. Pretty similar. What have we got here? Sorry, let's just click that off. That's on the VPA chat room. What have we got here? Well, we've got the highest volume here matched with this volume over here. So, we've seen this market move lower. Then we get this very large increase in volume on this particular candle. That can only be stopping or in other words, buying. The preponderance of activity in that candle is largely buying. It has to be, because if that were not the case, this candle would have been closing down here somewhere with a big widespread candle on that sort of level of volume. There's no other way of looking at it. So, that's the interpretation. What we're looking for constantly is either anomaly or confirmation. In other words, is volume and price in agreement, or is it in disagreement? Now, that's not to say that at this point the market is just suddenly going to reverse upwards, but what it does tell you is that expect some congestion because you've got decent buying in here. There is possibly a reversal on the way, and that reversal will be signaled first of all over here on the 15-second chart, because we'll start to move away from the volume point of control if the bullish buying is enough to drive the market higher, you'll start to see the trend monitor transition through into a different color, maybe into a darker blue or a darker red. It's going to go into a darker red. If this is going to transition into a reversal, it's going to flip through into the 1 minute. It'll then move into 3 and on down into 5 and etc. etc. And you can see the impact already clearly on the 5 minute. Yes, we had the price waterfall, but an absolute ton of volume coming in here. The market makers, the big operators are in here. The volatility is triggered. So we expect to see at the very least one of two things, either congestion to follow or a reversal, which is what we are seeing now. It is the power of the indicator. And to be honest, for $57, it's just ridiculous. I mean, we should be charging a lot more for it, but we don't. And it's such a powerful indicator. If you're in a trade and you get a volatility trigger and you're in profit, close out, take your profit off the table, or if you're trading multiples, leave some of it on, leave 1 to run or 2 to run, get out the market, bank what you've got, just wait. Because if the market congests and continues on in the original direction, what have you lost? You've lost a few spread points. If it reverses against you, you're happy, you're out the market, or you've got a very small contract left, you've banked most of your profit, and you're now trading in reversal. And that's what we're seeing here. You can see the trend monitor's reversed. We've gone through the typical change in colors, which is from bright red into darker red to indicate that there is a change of sentiment on the horizon. Then we go into the darker blue, which is the next color, and we come out the other side into the bright blue. It doesn't always follow. Sometimes you miss one of these out. Sometimes it goes straight from bright red to bright blue. So there's no rule book, playbook that says that it has to go in that particular sequence. It's not a traffic light sequence that is fixed in stone, but that's what you're looking for. We're now starting to see this, and that's why I like using the 15-second chart, because it just gives me a heads up, a very close market heads up as to what's coming up. We're now moving into positive territory, bullish. No change here yet on the trend monitor. No change here. You wouldn't expect to see it on the 3-minute time frame. It's too far out. And it's the beauty of the trend monitor. It gives you that confidence to signal changes in sentiment, but also to help to keep you in, because once you're in a position and it starts to move into a congestion phase, that is the point at which you will start to panic and you will start to close out, and you'll close out far too early, and you'll lose all the profit that is subsequently available as the trend continues. Because this business is about staying in a trend. You'll have lots of small losing trades. Everybody does. We all do. It's part and parcel of trading. You cannot trade without making losses, but you keep them small and you counterbalance them with much bigger winners, fewer of them, but larger. And that's what the trend monitor was developed to do, to help to keep you in through this. I mean, you've got a very small example here into this little congestion phase, maybe enough to kick you out of the trade. You think, oh, I've got a bit of profit here. I've gone from 20 up to 36. Very nice on an oil contract. Oh, are we going to reverse? Oh, well, I better close out. Now you're sitting there thinking, I got out at 36 and now we're trading at 48. How stupid am I? You're not stupid. It's the emotion that it's in our DNA that we can't help. We cannot help ourselves because it's programmed into us deep within our evolutionary process that once we have something, we don't want to lose it. So we hold on to it. And once we see something starting to be taken away from us, our instinct is to grab it off the table and bank it and put it in our piggy banks. It's human nature. And that's what we developed the trend monitor for, that simple process of trying to help to give you the confidence, and more importantly, using it in multiple time frames, not just in one time frame, but in multiple time frames in this way. This was the buying we saw came in on the 1 minute. This was the anomaly we saw, very clearly defined. We see the buying coming in, we see the stopping volume coming in, and now we're starting to see it rise. Now, what's worrying about this little rally here, you can see here, see how the volume is rolling over, the market's rising, and yet the volume is falling. Not a great sign. So if you're seeing that, you're thinking, I'm not sure this is going to go too far, but let's see. We've got some weakness coming here. The market's trying to rally, bit of a wick to that one, decent volume under there, but let's just see if it's going to continue higher. You'd also be looking, obviously, as you're trading a commodity, you'd be looking to see what the dollar's doing. See if the dollar's rising or falling. Let's have a quick look over there at the currency strength multiples, wherever it is. There we are. There we go. What's the dollar doing? It's kind of, there's a bit of buying of the dollar, so not great for continuation. We want to see falling volume, but let's go back to that and just see where that's taking us. Yeah, so we're seeing a bit of a pause point now. And really no great surprise having seen that rolling over. What have we got here? Not much to report on the 3-minute. We've got some very minor resistance building overhead here. You can see this has been tested once. This is a hugely strong area. This region around here is massive. If the market gets to this level, in other words, another 40 cents a barrel, if it gets anywhere near this region, then I can guarantee you it's going to congest and won't go very far, because you've got that to get through, you've got another level above, you've got the volume point of control, and you've got all this volume over here as well to deal with. So in terms of a trading opportunity to the upside, once you're in this and you're looking at the chart and thinking, well, how far is this going to go? Certainly from a 3-minute perspective, you've got another 40 cents of value in there, possibly. Let's go down onto the 5-minute, see if that's telling us anything different. Pretty much the same. You've got the volume point of control, not such strong price-based resistance. It's a much higher level up here, but you're certainly going to hit the volume point of control there and run into congestion at that point also. Let's go down onto the slow time frame of 10. Again, we've got the volatility trigger, big candle, 1.5 tons of volume. You're going to get congestion or possibly reversal. Every chart on the time frame is telling you something. It's confirming what you're seeing in other time frames. It's giving you the complete picture of what to trade. And over onto the daily, we write extensively about the oil contract on a weekly basis. Certainly from a fundamental perspective, it's pretty weak in terms of the supply-demand equation. OPEC's been trying to manage the supply side of that equation. It can't do much about demand, but it tries to manage the supply to keep prices afloat, excuse the pun. But that hasn't had much impact either. And we've been trading around this region, and we're back at the volume point of control as well on the daily chart. So, I think last week we wrote about it, or back end of last week, I can't remember now, and said, oil's not going anywhere fast. That's the technical picture at the moment. But from an intraday perspective, does it mean you can't trade it? No, of course not. It's showing you, but you've got to be aware of what the daily picture is and just trade what you see on the chart. The buying comes in, the buying comes in. Maybe not very strong, as you can see here, it doesn't look very strong. Go back to the 1-minute.
Did you do the 4-minute YM at all with those 3 candles going up?
Yeah, no, I did it on the daily.
Oh, can I check, please?
Yeah.
2 seconds.
Yeah. Just going to pass back to Anna for a moment. Hold tight. The VIX is rising quite strongly at the moment, by the way. It's up to 26.7. So perhaps we might have got some movement on the indices. I haven't looked at them, but I'll go and have a look at them in a moment.
When I left you, I must admit, I thought David was going to look at the faster charts, but if you recall, we looked at this surge in activity participation that we would expect at the start of the physical session for this market. It's a huge number of traders joining in, and I said at the time what I didn't like. I could see the market rising, and we looked at these 3 volume bars falling, and in fact that's what we had. I said we also had this big resistance here. This is this red hatch line, and it couldn't get beyond there. That was the first clue that this wasn't going to, the traders, if you like, they see a rising price. Okay, the volatility is over. They see the rise. Oh, great! Markets went up yesterday, so maybe the logical conclusion was it's going to go. It is going to carry on higher. It didn't, and in fact, it's now reversed once again. We've got a little bit of buying under this candle here, as you can see from the wick to the bottom. But generally speaking, I would say you described it as choppy. Choppy markets, choppy, very, very, and that's what you have to. If you see an opportunity, you take it. you know, and you get out fast. In fact, this is nice. This, when it did actually fall, you can see the volume rising underneath the candle, so you know it's a genuine move. Then you look at the you know, how far is that going to go? You look at the support and resistance levels. You watch to see if there's, you know, if it is going to reverse at that point. At the moment, the price action seems to hit significant levels, but, you know, not perhaps as precisely as it would normally do. It's just the type of market we are in at the moment, as I said, given what is going on in background, not only with the virus, with the US presidential election, but for us, what does that mean? It means, you know, trading opportunities. Investors, that is a totally, you know, that's a different kettle of fish. As an investor, I don't know. Just to finish up on the VIX thing, you know, people are looking at the VIX now at the cost of calls, if you like, moving to November, and they become more expensive. You know, when the market is in, you know, booming, and somebody decides to buy an insurance policy by buying calls, they're going to get a cheap price, because, you know, no one thinks the market is going to reverse, you know, dramatically, maybe 4 or 5 months down the line. And if you think back to what the market environment was in the run up to Christmas, and in certainly in, you know, in January, there was no hint that we were going to have this you know, this dramatic reversal. But everybody knows the presidential election is going to cause volatility, so it's like, you know, all insurance, it's going to be expensive. So what they also are saying, I think it was in the Financial Times, is basically it just becomes too expensive. So if you have a portfolio, it's probably, you know, what's happening is portfolios are being not collapsed, but there's more selling. They say, okay, it's just too expensive to insure. We'll sell some of the shares, and, you know, wait, and we'll ride out the storm, as it were, because, you know, the guys that bought all those calls, their calls would have been, it makes up for the fall in the portfolio. There's all very careful calculations, aren't there, David, on I won't go into options at the moment, how you figure out how many calls and what you need to pay for them to cover a potential reversal of 5%, 10%. It's you know, it's a bit beyond me at this point in the afternoon. So I just wanted to you know, explain that to you. But looking at the charts on a very, you know, very straightforward level, you look at the price action, you look at the volume, there are plenty of examples. And the great thing about VPA is this: these examples, these patterns, they repeat all the time. So once you get to understand them, once you begin to recognize the anomalies, and you know, you look at your candles, you look at your candle patterns, and you know what you're looking at, when you see them again, you'll recognize it. And that makes trading very comfortable. You're not at the mercy of your emotions. Right, I'm just going to pass you back to David. We'll see what happens with the YM, and let's see what Biden and the Trump debate is later on this evening.
Back with me, just clicked my microphone on, which occasionally I forget to do. Back with oil, and just to see where this is going, and it's not looking, you know, terribly strong at the moment, as we thought, given this attenuation in volume here. So we're you know, we're in a congestion phase. We're in the congestion of the candle here, which is what we expect to see anyway. Was a little rally, perfectly tradable, as you saw on the 15-second chart. Let's just head over and see what's going on in terms of YM and the other indices. There we go. We've seen a little bit of a move, not hugely dramatic, and the reason that we've seen that is because over here on the VIX, just pop that up, there we go. We've seen the VIX move higher on the 1 minute, you know, it's rising on the 5 minute, 10-minute and the daily, but we've got an awful lot of volatility coming in. Certainly we've got a volatility trigger on 5 here, so we've got, and the volatility works in exactly the same way. This is this is the VIX chart, but the indicators work in exactly the same way. I've got the trend monitor on here. You can see it there, it's on all time frames, and I've got the volatility on here as well. So it just gives you an instant heads up as to what to expect next. So we're going to see congestion, yeah, from a five-minute perspective. Looks as though it's going to move sideways on that one. And that's the reason we've seen that particular move lower, just generated enough sentiment change, shift in sentiment, if you will, to reverse away from the volume point of control. Just see where that's gone. Is that tradable? Yeah, if you were on a 15-second chart, certainly almost certainly that would have been tradable. And moreover, if you've been on the Renko as well, I've got the multiple Renkos over here somewhere as well. I haven't got the tick charts open at the moment. I've got tick charts currencies. Where are we? Renko chart, what have I got on here? I've got the YM, there we go. So yeah, absolutely, it's tradable. This is on, I've got the 15-second, 30-second and the 1 minute strung along the bottom. These are the equivalents on the Renko optimizer, because you can set this to any time frame and it'll deliver the optimal brick size. So if I select 15-second on here, it'll just settle and it'll tell me, what is the optimal brick size, and it's telling me 10. I did this morning on the pips. You have to put a decimal point in, but we are trading index points. We're on the YM here, so we're trading straight index points. So each of these bricks will be 10 points. So at $5 a point, you can do the math. That's a decent move on Renko, not very stressful. Let's move over onto the 30-second time frame. Do the same exercise. This will be a slightly larger brick. That's coming up at 14. So we've got 14 points on that one. And if we go over onto the 1 minute here, that will deliver a larger brick still. And that's coming up at 20. So each of those bricks there is worth $100. And they're used in exactly the same way. We're using them as multiple time frames to give us perspective on what's going on. We're into congestion phase. Trend monitor works in exactly the same way. We've got the trend dots on here. The two of them complement one another perfectly, because what the trend dots do is work very close to price action. You can see here, they've reversed, they've gone into blue, they've gone above the brick. So it's just, they've got underneath here, and then they've rolled as the price action reversed again and gone to the top side. Now we're moving into possibly congestion phase. They might turn gray, but the trend monitor continues to maintain a bearish sentiment to the longer term picture, because it's looking at it from a longer term perspective. It's taking a more considered view, if you will, of the price action and trying to analyze for you and say, well, okay, I can see the congestion, but is this actually a change in trend, or is this just merely a piece of congestion that we get in every trend that develops? That's when it will start to signal a slight change in color, maybe to a darker red or a darker blue. But if it isn't a true change in trend, then it will come out the other side as it did in here. We had the rally here, and then it's in blue, then it's gone dark red, and now we've gone into bright red as the bearish trend begins to take hold. But it's all done against the framework of an optimal brick size. There's no guesswork here. Yes, you can set it to whatever you wish, but what this is doing is actually delivering to you the optimal brick size for that particular instrument at that particular point in the trading session. Because this changes. If I were to do this, if I were to check this again in maybe 15 or 20 minutes, you might find that this has reduced. If the activity and the momentum in the market has slackened off, then you might find that this has gone down to 8 points or maybe 6 points or 7 points. It's a living thing. The market is a living thing. It speeds up and slows down, because the one thing you see on a Renko chart, which you don't see on a time chart, is obviously momentum. If the market's very fast moving, then the bricks will form very quickly, because they're independent of time. Yes, I've set it up on a 15-second time frame, but the actual brick compilation, the time it takes for each of these bricks to build, to deliver their 10 points is different, because the metric is not one of time, it's one of brick size. So if it takes half a second to build a 10-point brick, and then the next one only takes a millisecond or a nanosecond or a microsecond, that's what will happen. So every one of these bricks will build in a different length of time, If the market is very slow moving, if I were to put this on, for example, towards the end of a session, then it would be very sluggish and the bricks would be a different value completely. You can see we've got volatility here. The volatility triggers come in, volume under there, nicely reflected in terms of the Renko bricks. You know, it smooths out the volatility, it smooths out the whippiness, the whipsaw, just gives you these nice bricks to trade. But if you're trading VPA, you've got the advantage of both. You've got a non-time-based chart above, and you've got the volume price analysis methodology below, plus all the indicators as well. It's just a perfect way to trade. And the same would apply using tick charts as well. So a nice trade developing there to the downside. Why is that happening? Pull over the VIX. VIX is rising, climbing again. Looks fairly bullish, the VIX. So we expect equities to fall. And that's what we're seeing. So there we go. I'm going to run. I'm going to grab something to eat, and our little dog needs a walk as well. So just to point you in the direction of all the various bits and pieces, this is where you'll find all the indicators over at quantumtrading.com. MT45, we've been on NinjaTrader all day today, and TradingView you've seen pulled over on the VIX. TradeStation's coming along, 9.5 and 10. 9.5 is the relationship between TradeStation and Interactive Brokers. So if you have an IB account, you can hook it straight through to TradeStation and trade through that platform. So you have all the advantages of the wonderful charting associated with a deep discount brokerage. It works a dream. I've got it running alongside me here. TradeStation 10 is TradeStation Securities. Again, fantastic platform, immensely powerful. Radar screen on both options. Slight differences in some of the indicators, but you know, it'll all be put up on the site once we launch that next month. Once we've done that, we're moving to TradingView. We're going to tidy up there and pull all the other indicators across that we couldn't at the time. We now do have that availability. So if you've invested in the TradingView full package, you're on a winner because you're going to get all those indicators for free. Once we've moved them across the TradingView, then we will uplift the price, because at the moment it's less than the MT45 price at 894. So the two will then be aligned once all the indicators are moved across. So it's not a bad time to buy the TradingView package of indicators in full, because you'll get all the other ones free of charge. This is the Forex education site, Quantum Trading Education, complete Forex trading program. It does what it says on the tin, basically. It's all in here, 200 hours of video. Start with the psychology of trading module, deep dive into fundamental analysis, massive program on relational analysis. The technical analysis is a deep dive into VPA. Lots of much more detailed stuff around Wyckoff, primary, secondary trends, all that sort of stuff, and the mechanics of trading as well. As I say, 200 hours of video and all backed up with the VPA trade room, which I've got open up here on this particular tab. Finally, on Anna's site, Anna Cooling, you can follow Anna's forecasts and analysis over there, and you can find all the books here. They're in Kindle and also in paperback up on the Amazon website. Thanks very much for coming along today. Hope you've enjoyed it. Hope you've learned something perhaps you didn't know before you came along. If you have any questions, always happy to answer them. It's anna@annacooling.com, david@quantumtrading.com. Enjoy the rest of the trading day. Enjoy what happens post the debate between Trump and Biden. We will see what happens. Markets are obviously going to take a great interest in that. Enjoy the rest of the trading week. We will be back next week, same time on this particular webinar session, or if you join us on the London one, it's 7:45 UK time. So thanks very much indeed. Stay safe, everyone. Hope you've enjoyed it. We will see you again soon, and bye for now.